All right, let's do another fun exercise today. And that exercise is going to be, if the market did crash here, how low realistically would the prices go? Because I know I got a lot of comments being like, well, a condo in Langley should be 50 grand, right? So realistically, if the market were to crash, where could we actually see prices go? And I'm going to start off this video again by referring to the psychology of a market cycle. So this is basically what they've plotted out as a bubble. And if you go back in history, which I'm about to show you, they pretty much all look like this. And my thesis as to why they look like this is basically when people start making money around here, and then when this happens, this parabolic rise to the upside, basically the market is then controlled by people with a short-term outlook. So a lot of the people that are buying in this ride up right here are only doing it expecting the prices to go higher. So they can't afford the assets that they're buying. They're stretching themselves to buy that asset, but it's fine because the price is going to be higher next week, right? And they don't want to actually hold this asset for 4, 5, 6, 7 years. They're hoping to make money in like the next year or the next 2 years or the next 6 months. And that's basically how you get this parabolic rise to the upside, is that the majority of buyers turn into short-term buyers, as opposed to in a healthy market, the majority of buyers would be buying for the long term. So if we go back and we look at Bitcoin, basically what ends up happening in these bubbles or these market cycles, if you want to call this a bubble, we don't know if it is. You only know that in retrospect, looking back, that yes, that was a bubble, because it might not be, right? But let's just say it is in this scenario. The prices pretty much always retrace back to the point before the parabolic rise started, right? Like, so if you look at Bitcoin in 2017, it was at 7,000, went all the way up to like 20 grand, and then it came back down all the way to 8,000 before finally capitulating down to $4,000. Now, if we look at Bitcoin in 2020, it was about somewhere around $17,000 before the parabolic rise, and then it came all the way back down to $22,000. So it didn't completely retrace all the way back down, but pretty much. And as you can see, what's happening right now, we had a parabolic rise to the upside, and it seems to be coming down the mountain. And if you go on social media and you see somebody shitting on Bitcoin, all the comments will be absolutely pissed that this person is shitting on Bitcoin. I've dealt with it myself on TikTok because honestly, like, I buy Bitcoin. I've made money on Bitcoin. I'm invested in Bitcoin. But honestly, I think the whole thing is stupid. I mean, I've been in it for 10 years and there's been zero innovation. The only thing that's gotten better is the fact that I can get my money in and out of the exchanges faster. And that's about in 10 years. Think about how much the world has changed over the last 10 years. And that's all Bitcoin can do in the last 10 years, right? So listen, I've been a Bitcoin holder for a decade. I still buy it. But again, it's the same thing that played out in 2020 and the same thing that played out in 2017, I think looks like it is playing out again, but I could be wrong. Now we look at the NASDAQ in 2000, right? It was at about, before the parabolic rise, it was about 2,800 and it came all the way back down to 1,700, right? That's just to show you. So if we apply this method of thinking, if, right before the market starts going parabolic, that's where prices can retrace to. Let's take a look at what's going on. So we are going to look at the Fraser Valley. On aggregate, we're at 970. Now, it depends where you want to say prices went parabolic. Did they go parabolic right after this point, or did they start going parabolic all the way back here, right? So let's just give the bears the benefit of the doubt and say it was here. 800,000, 778,000, down from 970,000. You've got, a 25% correction there to go for aggregate prices in the Fraser Valley. However, if it's this price point, well, you only have about another 5%. Now, if we look at detached homes, you're at 1.5 million right now. See, now this chart would say that we've already done that full retracement. We've already come back down to that, tiny consolidation before the parabolic rise. But if we don't look at it like this and we actually take it from basically right here, December 2020, we're at 1.1, right now at 1.5. So we have about a 40% correction to go for Fraser Valley detached to get back and retrace pretty much all of the gains that were made post-pandemic, which would be absolutely devastating if that was the case. Now, if we look at apartments, this is an easier chart to decipher. We're at 538,000. Again, I feel like this would be the consolidation point right here, just because you have another touch point right here in 2018. So let's just take like the peak of 2018, 424,000 down from 534,000. Again, that's like a 23% correction potentially for Fraser Valley apartments. And now if we look at townhomes currently trading at 826,000, if you want to take, this touch point here, you're looking at, again, a 20% correction. But if you want to take the high of 2018, roughly right here, because you've got a few touch points kind of at that price point, you got one high, and then right before prices went parabolic, you got 624,000 down from 829. That's about 200,000 at this price point. Again, my math probably isn't amazing, but I'm going to say that's probably like 25%, 27, 28% or something like that. Now, if we look at the GVRD, like this is a decently healthy chart. Like this isn't very scary. Like before prices went parabolic just after July of 2021, we're pretty much trading at the highs of 2016. So this doesn't look bubbly at all. This looks like a pretty healthy chart in my opinion. So I don't know, let's just say they retrace back to May of 2021. You're looking at 2 million to 1.8. That's only a 10% correction, right? So, I don't see it going back below 2016 prices, but I could be wrong. Apartments currently at 759. Again, this is a pretty healthy chart. Like 2018 prices, again, is kind of the touch point before things started really taking off. But you'd be looking at 673 from 759. That's about 20%, I believe, about a 20% potential correction there for apartments in the GVRD. And then townhomes. Now, this chart is a little bit more parabolic, right? So let's just take the touch point of the high in 2018 at 843. You're somewhere around here, February 2021, all the way down from 1.1 million. Now you're looking at like a 28, 27, 28% correction potentially for townhomes in Vancouver. Now I want to go back to Vancouver detached specifically because this chart I feel like is healthy and easier to read. To get prices to come back down, basically and trade at these 2019 prices. You guys have to remember there's like a couple million extra people living here. The value of the dollar has been devalued since then. There's more people living here. We haven't kept pace with the amount of homes being built. So there's a lot of things fighting against downward prices for detached in Vancouver at the moment, in my opinion, right? This chart doesn't look bad at all, just the way I'm looking at it right now. This looks like a very healthy pace of growth for Vancouver detached. Now, the Fraser Valley, it has definitely been a lot more volatile. Like a Fraser Valley townhome is definitely the scariest looking chart of all the charts, I would say. But oddly enough, still performing better than pretty much everything else, time of recording right now. But hey, man, anything's possible. Again, this is just an interesting thought experiment. It's possible prices could crash. We could retrace that entire bubble, but keep in mind that doesn't happen every single time, right? As an example, well, you could go back to 2015 and say, well, how come we didn't retrace all of this? Look at this parabolic run up that happened. How come we didn't retrace all of that, right? You go into detached. Okay, how come we didn't retrace this entire parabolic run up? We had this huge parabolic run up and then we only came down, whatever that is, 5% from that peak, right? What about apartments? Look at this. We retrace pretty much nothing here, right? So, and then this is where the bears are going to argue like, yeah, that's where the parabolic run up starts. We need to come back down here. Apartments need to be 200 grand, right? But yeah, it's definitely possible, right? That's, if it were to happen, if things were to get really bad, that's kind of the price point that I'd be looking at. That's where I think is a retracement would be possible. Are we going to retrace back to $200,000 in November of 2015? Probably not. I think that's a nuclear scenario for that to happen. But yeah, I don't know. If you enjoyed this video, like, subscribe. If you want to chat with me about buying or selling in the Fraser Valley, book a time to chat with me in my calendar. Otherwise, just appreciate you guys for being here. I'm that Agent Kelly, and I'm making moves to move you. Peace.